So at the bottom of my email, I have a little tag that says fiduciary plus fee only equals your best interest. And I think that just the term fiduciary sounds kind of funny, right? So what does that mean exactly to be a fiduciary advisor? I kind of look at it as like a doctor, and you want your doctor always working in your best interest. You want your real estate agent working in your best interest. You'd want your attorney always working in your best interest, putting your interests first. And unfortunately, in financial services, it's not that clear. In financial services, we have two standards. We have fiduciary, meaning you always have to work in the best interest of the client, and if you're not, you have to disclose it. Or you have suitability, and is what I'm doing for you suitable for you? And that sounds fine, right? To be suitable for something. You might be suitable to have a $10 million mortgage. It doesn't mean you should have a $10 million mortgage. Where a fiduciary might say, no, this is not in your best interest to have a $10 million mortgage. Another example is, in our industry, there's a lot of sales of things. There's advisors who sell stuff. Even CFPs, majority of certified financial planners, actually aren't doing planning. They're actually selling you stuff. So you look at annuities, life insurance, even sometimes in cases health insurance. These are all products that are sold by salespeople. A financial plan is not something you should be sold. The financial plan is actually a fiduciary advisor is going through the planning process with you to determine what the best course of action is on then how to implement those recommendations. So in some parts of our industry, the advisor would simply be acting as a fiduciary in the planning process, but then in the sales or the implementation process, they're actually more under the suitability standard versus fiduciary. So ultimately, I think the best thing that our industry could do would be to move to our business model, which is fiduciary, working in your best interest. If there's a conflict of interest, I must disclose that to you. And then on the fee only side, that simply means that our firm does not sell anything. We don't sell mutual funds. We don't sell life insurance. We don't sell health insurance. We don't sell annuities. So that means that we're just sitting on the same side of the table as the client, helping them make the best decisions going forward. We do manage assets. We do charge a % of assets under management, or in some cases, we charge a flat fee for assets under management. But that really still puts us on the same side of the table. We're not incentivized to increase your assets under management. Obviously, everyone wants to increase in assets under management. We're not incentivized to put more money there necessarily based on our unique process. So whenever you're searching for a financial advisor, make sure you're looking for a fiduciary fee-only advisor. You have to come out right and ask that question. Are you a fiduciary and a fee-only advisor? Fee-based advisors actually are still selling you stuff. I know this is all very confusing, but ultimately it's our industry, our regulation that makes it so confusing. Because honestly, there's a lot of, most of the big firms out there are looking to push product to increase their revenue, not necessarily your bottom line.